Common question I get, what is working interest, what is net revenue interest, and what is royalty interest, and how do I calculate my income from an oil well? I'm Sean Pruitt, president of Kingdom Exploration. If you like these videos, please subscribe. So that's a very common question if you're new to oil and gas industry, whether as a royalty owner because you own some land and you have some people drilling and you want to know how much revenue you make, or if you're investing in oil and gas. Very common question. I'm going to answer it very easily for you. So working interest, 100% here. Now, working interest simply means the percent of an oil well. Simply, it's like a pie. If there's 10 pieces, 100% of that pie would be the 10 slices. Well, that's in the same form as an oil well. There's 100% there, okay? So here's a typical oil deal. If you look here, so it says here that there's 100% working interest, okay? So here is the net revenue interest, okay? So right here it says 80% net revenue. Now, before payout and after payout. Before payout simply means anything before you get 100% of your money back. So if you invest $100,000, until you get your $100,000, that's before payout. After payout is after you get your $100,000 from income, okay? So sometimes operators might change the before payout net revenue and the after payout net revenue. Most times they reduce you to a lower net revenue. So your income might be $10,000 a month and it might drop down to $5,000 because they drop your revenue in half because you got 100% of your money back. I don't care for those kind of deals, but that's another conversation for a later day. Okay, so we got 80% net and we have 20% royalty right here, 20% royalty owner. Okay. So what is that? Let's put that on the spreadsheet here. So the royalty is 20%. Okay. So I'm going to take this 100%, multiply that times 0.20, which is 20%. Okay. Now the way you kind of come up with your net revenue is by taking the working interest and subtracting the royalty interest. Okay. So that leaves you with 80%. Okay, a lot of people call it in your book. You might see NRI, net revenue interest. WI stands for working interest, and RI stands for royalty interest. Okay, now here's the thing: what most people don't understand. Okay, so the royalty, that 20% normally goes to the landowners and the operator. Okay, so if you owned 1,000 acres and you didn't have the $10 million you needed to drill on your own land, not to fear. Okay, you go to an operator and they'll give you 12% royalty of an oil well, and they'll pay for the cost of drilling. Okay, so for every 1,000 barrels of oil, you're getting 12%, 120 barrels of oil. Okay, and without having to pay for it. All right, and so you get that in the form of monthly checks when they sell the oil to the refinery. They'll send you your 12%. Okay, so net revenue is after you subtract the working interest from the royalty. So let's break this down into a barrel of oil. Okay, so oil production. Let's say this well produces 100 barrels of oil. Okay, a day. All right, so 100 barrels of oil would 30 days of production. You take 100 times 30. Okay, so don't know what I did wrong there. This times a 30. Okay, so that's 3,000 barrels of oil a month. Okay, so the gross on that, the way you figure out the gross as far as income, you take current WTI prices, which right now, WTI right here, West Texas Intermediate crude, is $37 a barrel. Now, the difference between WTI and Brent crude, and these are the two most common benchmarks for oil, okay? WTI crude, West Texas Intermediate, is mostly infill drilling, land drilling, whether in Texas or in Oklahoma, okay? Where Brent crude, that's mostly for exports, okay? What you would expect to sell a barrel of oil if you export it to another country, okay? So right now, WTI crude is $37 a barrel, all right? And so you take WTI, $37 a barrel. Okay, so $37 a barrel. So the gross on that oil would be you take the 3,000 barrels of oil, multiply that times $37 oil. Okay, so that means the gross on that is $111,000. Okay, now the severance tax is 7%. Okay, and so let's put a percentage here, 7%. Okay, so we would put 0.07. Okay, 7% severance tax. Now the refinery, the gatherers come pick up the oil, take it to the refinery, and the refinery automatically removes the 7%. Okay, so that refinery, we take this, multiply it times the 7%. Okay, so the refinery is getting 7,000. Or the severance tax is the state is getting $7,770. Okay, and so the net after refinery, we subtract the gross. This is all basic, guys. You guys can figure this out. Okay, so there's a gross from the refinery for $103,000. Okay, now the royalty interest owners. Okay, the way we calculate this, the royalty interest owners gets 20% of it. So we take this and multiply it times this. So the royalty interest owners get $20,646. Okay, and the net revenue interest partners, you take the 80% and multiply that times. So the net is $82,584. Now we have operating expenses. Okay, operating expenses on a monthly basis. For instance, our wells are about $400. Let's just say for math purposes, operating expenses are $1,000. Okay, $1,000. All right. So we take. Let's just put that there. Actually, let's do this. Okay, so after operating expenses, okay, $81,584. Okay, now there's a few other expenses, but we're not going to get into that. That's a ballpark figure of what your net revenue would be. So if you bought the whole well, you would get a monthly check for $81,000. On an oil well. And let's say the well cost $1 million, you're making $800,000 a year on $1 million oil investment. All right. Now, you're not going to invest $1 million. You're going to buy what's called units. Okay. So let's say 1 unit. All right. So let's put units here. Okay. So let's say there is 10 units. Okay. 10 units. That means working interest per unit, you would take the working interest divided by 10 units. So that means each unit would be, okay, so each unit would be 10%. Okay, so if there's 10 units and there's 100% working interest, you take the 100% and break it up into 10 pieces, which would be 10% working interest. The net revenue interest per unit would be this divided by 10. Okay, so 8% net revenue interest. Okay, now if you own 8% net, 1 unit revenue, you would take this and divide it by 10. Okay, so if you had invested $100,000, you're making $8,158 a month. All right, guys, I hope that makes sense to you guys. If you have any more questions, feel free to call me anytime. My information is in the description below. And if you like this channel, please subscribe. Thanks.